CNBC TV18, celebrating 15 years of leadership.
Hello and welcome to Markets Today. I'm Lata Venkatesh in the Mumbai News Centre, and Surabhi joins me from the Delhi studios. Surabhi, it was a weak session, and it is 4 out of the 5 past days indicating the market's weakness. There was global cues which were negative today, as well some mighty names like Infosys, HDFC, Reliance, ICICI Bank, very importantly, started seeing selling. So this selling looks a little scary.
Tata, absolutely. It's been a weak session. Let's see if the end of the week will paint a better picture. But for now, another week Thursday. Let's quickly run through the headlines. Another weak session as global woes and ongoing profit-taking grip Dalal Street. The Nifty and Sensex lose nearly 1% to end near the day's lows. Oil and gas, real estate and IT stocks lead the declines.
Midcaps have a weak session as well, with the midcap index falling in line or as much as the benchmarks. Havells tanks 9% as the company cuts its sales guidance. TTK Prestige is also in the red after the company sounded a note of caution on its sales growth.
However, all's not lost. Sugar stocks buck the trend, rallying between 4 to 6% as the cabinet hikes the price oil companies pay for procuring ethanol. The new price range stands between 48.5 rupees to 49.5 rupees, depending on the distance of the oil company depot from the sugar mill.
And here are the experts that we have lined up on the show for you today. Dheeraj Agarwal of Standard Chartered will get us his take on the market. Sudarshan Sukhani, as always, will talk us through the technicals of the market. We'll also get you managements of some of those consumer goods companies that were in the news, that were falling, on why they were witnessing such a slowdown.
All right, before we get to all that analysis and the views, let's straight away move to the day's trading action. It was a roller coaster ride on Dalal Street, one that ended on a sour note, unfortunately. The Sensex lost over 200 points in what was a very volatile session. The Nifty lost just about 60 points to break below the 8,300 mark. Anuj is here with the day's trading action. Anuj, not a great close.
Well, bad day for market. In fact, bad would be a bit of an understatement. It was a copybook session for the bears today. Gap down opening, intraday recovery, that was sold into, and the market closed at low point of the day, really establishing the market firmly as sell-on rally. And the Nifty has now corrected 4% from the peak. The only silver lining is that the bank Nifty is showing some signs of life, and that could be something that the bulls may well want to latch on to. Individual stocks, well, where to start? Really, the 3 big heavyweights that drag the markets were Reliance, Infosys and ICICI, all contributing more than 10 points to Nifty's decline. Apart from that, you had ONGC, HDFC and Bharti Airtel also dragging the market. And of course, commodities were weak, so Jindal Steel, Tata Steel, Kane, they were down. On the winning side, 3 stocks stood out really: ITC, Tech Mahindra and HDFC Bank. Quite a bit of support for the market from there. And on the mid-cap side, really, Havells, again, for second day running, was a stock of the day, down quite a bit. HDIL and Bharat Forge were also down. So 4% correction completed for the market now. Smart Money still believes that the Nifty is heading towards 8200 to 8250. If it breaches that, things could get a bit ugly. But as of now, that's where the support stands.
Thanks a lot for that, Anuj. Let me just add my 2-bit on the bank stocks. Their outperformance, so to speak, the bank Nifty fell just about 1/3%, I think. Yeah, there it is. And the CNX PSU Bank Index also fell just about 0.4%. Now, this outperformance largely comes from some of these banks like Canara Bank, Central Bank was outperformer, Bank of India. I'm a little eerie about this outperformance. There was a rumor, a hope, a buzz in the markets that the Reserve Bank could cut rates today. This is hope springing just from the fact that the Reserve Bank has called a press conference, which is a very routine conference after the board meeting. The Reserve Bank board meets in Kolkata, and it's routine to have a press conference thereafter. So these rumors, when they get realized to be wrong tomorrow, could see a bit of profit taking in these stocks as well. So I would be wary actually of the strength of the bank Nifty.
Anyhow, let's quickly move on and look at some market opinion now. Dheeraj Agarwal of Standard Chartered Securities is not expecting a deep correction in the market in the near future, but he does believe that the Nifty could rise 30 to 40% in the next 24 months.
I doubt if we'll get a major fall. Can it go slightly more deeper? Difficult to say, difficult to rule out. But I mean, if you define major as more than 10%, I don't think so. If you define 5 or 6% at major, 3.5 has already happened. Another 2% can happen. Tough to say. I think 24 months will go to the extent of saying market could be 30-40% higher as compared to the current level. Next 6 months, I think, can be fairly challenging. It could be chopping up and down. From the next 24 months point of view, I think given everything the government is doing, either sorting out the coal supply issue or going in for faster execution, faster implementation, faster approvals, all of those things will unlock some of the latent suppressed GDP growth at this point. I think that should be enough to take GDP growth to 6 to 7% range. Which basically means a lot of pressure which has been there on sectors and stocks because of declining economic growth tends to reverse slightly. So it will be largely economy sensitives and cyclicals from 24 months point of view.
Well, that's a bet that the Indian economy will cyclically recover and that the government will get to doing that. Now let's get all the action from the futures and options space. Nigel D'Souza is standing by.
Well, just looking at the derivative data, it appears that the range for the Nifty seems to be moving lower. Now, the highest open interest on the call side lies at around that 8,500 call, while on the put side is at around that 8,300 put. But importantly, the range is moving lower, and that was precisely what was indicative by looking at the derivative data. So the 8,550 call, that saw shedding, and the 8,400 put as well, that as well saw shedding in today's trade. So traders are going ahead and in fact writing the 8,500 call as well as the 8,400 call in today's trading session. The 8,300 call as well was fairly active. Lower level put buying, that's making a good money. So the 8,200 put as well as the 8,100 put saw the premiums on both those two strikes move higher in today's trading session. The 8,100 put, in fact, the premium moved from around $7 to around 11 rupees. But traders see some kind of support at around that 8,250 level. So that's going to be a key important level. And in fact, from there, it'll be interesting to see whether or not there is some buying on the Nifty. Individual stocks that were in focus today, we did see big shorting on the likes of JP Associates as well as HAIL. Both those high beta counters getting sold into, while Havells for the second day running, that stock was aggressively being shorted. Also watch out for something like an OBC because that one has had a bit of a run. It came in with some unwinding pressure, as was the case with something like an Apollo Tyres. Both those two stocks did see unwinding pressure. But the newest entrants in the Nifty, they have been doing well, and today was no different. So Strides Labs as well as Wockhardt, both those two stocks saw big buying interest in today's trade.
Oh yes, they turned out to be the safe harbor, didn't they, Nigel? Well, let's get to the sugar stocks then. Sugar stocks rallied between 4 and 6% today on news that the CCEA, that's the Cabinet Committee on Economic Affairs, has approved ethanol blending policy. Now, the price for ethanol procurement by oil marketing companies has been fixed between 48.5 to 49.5 rupees per litre. At present, or up until this order, ethanol was priced at 42 rupees per litre, as stated by the Food Ministry. Let's hear out industry body ISMA, the Indian Sugar Mills Association, and Praj Industries Management on the matter.
The government has increased the ethanol procurement price at the mill gate by almost about 1 rupee 50 paisa per litre. So if I talk about 100 litres of procurement, it means about 150 crore rupees annually extra for the sugar industry. But if you look at the revenue realization for at about 49 rupees into about 100 crore means about almost 5,000 crore of revenue realization, which today was about, I will say, about 2,000 crore.
This is a step in the right direction. I think it shows government resolve towards the blending program and I think towards ultimate ethanol sustainability program for the country. And I think this would mean that the overall blending percentage, which is hovering around 2%, would go up as per the mandate closer to 5%.
Okay, well, sugar stocks were soaring in trade today. However, the consumer goods space had a bit of a tough time. The visible slowdown in the segment has prompted two blue chip companies, Havells and TTK Prestige, to scale down their FY15 guidance. Now, TTK has cut its sales guidance from 25% to just 12 to 14%. Meanwhile, Havells has lowered it to 12 to 14% yesterday from 17 to 20% earlier. TTK Prestige was down about 1.5% in trade, and Havells took a much bigger beating. It was down another 9.5% after the 7% fall that we saw yesterday. Let's hear out the managements of both the companies.
We are seeing a growth in Sylvania revenues this year, and we are expecting a 5 to 6% EBITDA margins, operational margins still in the international markets or in Sylvania margins, and I think we'll be able to achieve that. Well, we still hope to achieve 13 to 13.5% EBITDA margins in the coming in this domestic market. Probably by the end of the financial year or the first quarter next year, we'll start seeing the uptake again.
Actually, our gross margins have not declined. When the top line does not grow by more than 10%, it appears that the EBITDA margin decline, but it's actually the inflation that's eating into overhead costs. Actually, our gross margins have not declined. Going forward in the year, we expect to end up again at about 12.2% growth. We are operating about 10 different segments, and each segment has different market share. For instance, if we take pressure cookers in the south, we have market share about 70%. If we take cookware, we have market share about 80%.
Okay, not very good news from the consumer durables. On to some policy action. The central government's GST plan has received a major setback. Abdul Rahim Radha, the chairman of the State Finance Minister's panel on GST, said that the states have rejected the centre's latest draft constitutional amendment bill for GST. The state governments want their original demands on constitutional bill to be met, which is really no tax on petroleum, alcohol out of GST, and no entry tax to be excluded. Let's hear out Mr. Radha.
We were surprised to know that Government of India has not agreed to our suggestions, to our recommendations we were made last time, except one recommendation. That we had said that IGST, the share of Union government out of IGST should go to the individual pool and should be devolved among the states.
All right, time for a break now, but coming up on the other side, Sudarshan Sukhani will be joining in for a technical chat, and we'll get you some brokerage views as well.
CNBC TV 18, celebrating 15 years of leadership.